All right, almost done.
JKN and Euronet gas, you still have like a $16, $17.
Okay, we should be live now. All right, welcome everybody. Good evening to everybody. 1 minute. I need to tweet this one, just to tweet this one. Just give me a few seconds. Market analysis. Okay. All right, welcome everybody. We're gonna start with the disclaimer. This video is for education purpose only. I do not recommend any financial advice or recommending to buy or sell any sort of stock or investment. For your financial advice, please consult with your professional financial advisor before making any financial decision. Based on this video and audio, those who are on Twitter, please hope you guys understand this video is not at all financial advice, guys. Okay. So now before the week starts, we want to talk about what the market is actually doing. So let's start with the market, where the market is heading. This is my thesis of thinking. This is what I think. Doesn't mean that the market can do that, but we're gonna start with that process. This is what my thinking is. Alrighty, so let's take a look at the daily chart. So those who are watching here, as you can see, daily chart, we always follow the waves, guys. Okay, so those who are new here, they need to understand we do not work like just the bulls and bears. Those many people think, oh, we are bulls all time or all time bears. No, we do not work like that. We work with I create my own waves and find the directions and follow the waves. That's what I do. I do not follow Elliott waves. I do not follow any technical waves which are pre-made, pre-done. Okay, so now as you can see, all these waves are as we predicted right here, where the market went down and then market took off. When the trend line broken, linear line break, then it become bullish, and that's where we are right now. So many people wanted to know where exactly this market is heading, right? I'm sure everybody wanted to know where market is heading. So let's find out. So I'm gonna go to the daily chart. So in this particular daily, what exactly happening here is, as you can see, that we are consolidating at this area. What is this? Which range is this? This is 410 area, which is 400 S&P 500. Now many people think, what is this SPY? Those who do not know about the SPY, S&P 500 is the main market indicator. Why? Because they carry the biggest, S&P 500 is the Fortune 500 company who have the greatest balance sheet than any other NASDAQ or Russell 2000s. And also I always prefer to have the S&P 500 and look at their market as a market indicator and see where the market is heading, and based on that we go further down or up or down, right? So that's why I use that as a market indicator. So as you can see, we are right here consolidating at 410 area. So what happened here? As you all can see, yesterday we tried to break to the resistance, which was 416, 415. We close above, and then this is day before yesterday, and then yesterday we closed below here. So still the resistance is intact here, and we are, but again remember, this was a Friday, guys. Okay, so this was a Friday where all option expiries, and I did mention on a Thursday that, hey guys, tomorrow is a Friday and market probably can end in the middle, where all the bulls can lose their premium as well as the bear, they can also lose the premium, and that's why they probably end in the middle somewhere, right? And no, most likely that's what exactly they did that, because there was no major event was going on in here. So now to analyze, this is the bull run right now here happening. So what do you think? Is this a really bull market? So we always take a look at the volumes here. So what I do is I open the volume here, and if I look at the volumes here, let's compare the last 10 days volume, last 30 days volume. So let me little bit, you can see here, this is the volume area. Let me get rid of this. I can draw this line from here. As you can see, this is almost 31 day. So we are lowest volume of the last 31 days. So you can see the volume is going down last 4 days. You can notice that still we're going the volume down. Okay, so that is not a good sign. When volume is going down, market is going up. But if you look at this last 4 days, 3 days are the red, but the market is basically is right there actually. If I take a look at the market, is right there at the 410 area. So we are still battling. So are we bearish or bullish in this market? Well, if you ask me, we are still consolidating in this area. So we have to get out of the daily and let's take a look at it 30 minutes and see where the market is looking like. So I'm gonna get rid of the volume. Just wanted to show you the volume. So we are in the bull market with the low volume. So that is not good, right? That's how we need to analyze. So that is not good. So let's take a look at the profile session where all the buyers and sellers are sitting on it. So what I see here on the top, if you can see this trend right here, let me draw a little pattern so you can understand what exactly happening. Right here, bang, you see that? Sorry. So this is the ascending triangle. If you take a look at the shooting upwards, right, is going upwards. So this is the ascending triangle. So we are still bull territory. How? Sloping support testing here, which is right here at this area, we bounce. Then again here at 387 we bounce. Remember, we try to break that. Now we are again testing here. Okay, so that's what we need to keep it in mind here, that we are testing this support, and we are trying to now bounce. Now if this support breaks right here, which is critical area, guys, okay, 410, as you can see right here, if this support breaks, then we don't have the buyer. That's what I would tell you right now. So if this is the support can break, maybe it can fake. Okay guys, remember, maybe it can fake and test the 200 moving average here. Okay, Once this breaks, candle close below tomorrow, then is a bearish sign. But still we have a 200-day moving average, which is 406 area. So once the 406 break, which is the previous 5th day, 1 2 3 4 5 6th day, previous 6-day price of control area, where all the buyers and sellers were sitting here too. Some of the position people have that. Once these get tested and broken, then I will be more than 50% bearish. Why? Because still we are in the bull trend. Remember, we are still in the bull trend, but this is the 1-day candle. Remember, this can happen probably tomorrow, maybe day after tomorrow, whatever. We'll see. If that happens in the bear side scenario, we are looking at right now here. So, but again, this is the ascending. Remember, this is ascending. Whenever is called rising bottom, higher high, higher low, higher high, higher low, higher high, higher low. But over here we took a 5 days to consolidate, right? So what does it mean? We are not finding the buyers here. Why? I showed you the volumes were low. But again, this is all agenda driven market, and we won't be able to tell, because what it shows, what it looks, it might not be exactly what it is for tomorrow, right? That's the reason we do not want to take our early position, because this market is not like a regular market we used to trade now. Right now the market is super dirty, ugly market right now. You got to be very careful. If you're holding your position, you got to be very careful, because this market is going in a swing mode, in a different modes, and then you lose all your position, particularly those who are holding options. That's why it's very dangerous here, guys. Okay, so this is the bear scenario. As I explained you, what would be the bull scenario? If the market bounce tomorrow, which is here 410 area, and it goes and travels here, but once we break the resistance of 417, 400, and right here previous price of control line was 417, then it can go and fly higher. Where the market is heading, as you can see, let's go back to daily chart. As you can see, if the market breaks the 417 area, then market basically is pointing north, which is around, we have bunch of resistance. Remember, we have a 50-day moving average resistance is around $424, 424. If that breaks, then we have a major sloping resistance also, which is same place around 425, 424. Then once we break that, then we have another resistance, which is, this is horizontal resistance, which several times we got rejected here, right here. That is another one, which is 429, 430. Then we have 100-day moving average, which is right here, which is 432. So what we need to do is, we do not want to go first whenever the week starts new. Remember, guys, market always tweak, and we do not want to be part of that trap. So take your time. If those who are scalping in the morning, absolutely, because they in and out, right? But the people who wants to choose the direction for the weekly, then they have to be very cautious on this scenario, because we are starting new week starting, they might test. So we will see, how we are always live. Market opens up, I'm always live here. We are live on YouTube, Twitters, and as well as on Discord. So everybody can see my screens, and I give my running commentary 8 hours, right? 8 hours constant, and it's free, guys. I do not charge, so everybody is can join anytime, and it's free, so they can learn out of every technical analysis, whatever I show here. All right, so this is what right now I can see in terms of market, where we do not want to go first. I give all kind of analysis when the market opens up, and see what are the price action happening. Let the market maker decide which direction they want to go, and you can scalp. That's what normally people do. People scalp it, and then the direction, because we are not in the bottom. When the bottom, and when we break the trend, then you can have a swing position open. If anybody want to open the position for swing long, yes, absolutely, they benefit. Right now we are not in a position where we can open a swing. So many people ask me, George, why you're not posting on a Discord about the new alerts? Well, I love to post, guys, but there is a lot of people who do not have experience for entry and exit, because this market, guys, is all about entry and exit. The moment you become a little greedy, that's where the problem occurs. And it's not about just you, it's about you need to spend some time into the market, and people more and more money they lose, then they understand, oh man, I was so greedy here, oh boy, I would have taken the profit because I had a 50%, 100%, 2% 200% profit. That's how people are learning, guys. So what I would tell people, do paper trading, don't burn your money. But right now this is not the market where we are here to go long swing position, because anything can happen, right? And you don't want to lose your money. Again, guys, this is not a financial advice. I try to teach you that how this thing works in the market, because market will take your money like this, man, guy, and the market will they can take your all money in your portfolio. The moment you think you gonna short it or you gonna go long, doesn't matter, still market can take your money. Even though market going up and you become bull, still market can take your money because you're playing option. Only way you can save yourself is if you're playing stocks, if you're playing equity, not the options. All right, so this is which scenario we're gonna look into it. Again, one more time I repeat it. 30-minute charts, we need to break if the bear, those who are bearish, if this trend line breaks, which is we are right now at the testing, if that breaks and goes down, that almost there, that here market is going down. And once we confirm 405, 406 area right here, if that breaks, then the trend will change. Okay, that trend can be changed towards down. If the breaks upward, we can go north, because our channel is north, upward channel north is intact. Okay, so this is what I'll do is, in the morning when market opens up, I always give a running commentary about the technicals, and we all can analyze at the time. But though, many people want to take that position, like most of the time people believes in those Discord or alerts on early alerts. Guys, stay away from those early alerts, because what they do is, to make money from you guys, they charge you $100 a month, and they give you alert, oh, if you do this, you're gonna do this, if you do this, you just do this, and that's it. And then you pay your fees, and they make, guys, nobody would know exactly what the market they want to do, right? That's how you're losing money, guys. One trade you make money, one trade you lose money, and then you think, oh boy, I lost. So stay away from those people, those who are charging. That's why I thought, let me come in a social media and try to help you. That's why I'm offering free. I want to keep it free so people can understand slowly. Okay, so all right, so this is where the market actually right now I feel like is heading. Now I also talk about let me bring it this one. I'm gonna bring the Twitter here. Oh, let me see, where am I bringing here? So what I tweet about is this, right, today, about Apple. So I'm gonna go to the tweet here one at a time. So Apple having a death cross on chart means bearish for long term, not a short term. To know more, join live. Okay, so what is this? What is a death cross? Many people have a question, right? So let's go through Apple. So let's take a look at it, daily chart on Apple, what exactly Apple is doing. So what I'll do is, guys, I will right now go to the market, and then slowly I will open up the space and I'll take the question. But right now, just give me a little time, and I'm going to analyze everything for you, so you would know exactly where the oil is going, where Apple going, Tesla going, market going, Nasdaq going. I will analyze where the economy going, pretty much many things I will analyze today. So just be patient. If you want to, take a popcorn and eat, that'll be fine with me. Okay, so what is death cross here in Apple, guys, because many people interested. So you can see right here, I tweet about it, death cross 50 MA. So whenever the 50 moving average crossed 200 moving average, that is called the death cross. So this is right now happening here. Okay, I'm gonna get rid of it to this, so you can see here, right here. So 50 day moving average, which is the fastest one, crossing the slowest one, which is 200. Right here. So we did not cross here. If you take a look at it, guys, look, this is 50, blue line is 50, purple line is 100, and this is 200, right? So we market was dropping, but we did not cross here, right? Nope, did not cross right here, right? Going up. So when was the last time we crossed the 100-day moving average? When the market crashed? No, it did not even cross here. Also 2020. Remember, guys, we did not cross in 2020 Apple. Okay, we did not cross in 2020. We tried to, we bounce. First time right now in last 2 years we did cross here. we did cross here, which is in 18, 19, when we had the right here we did cross here in 2018. Okay, so let's take a look at it. So we are Apple. Look, remember guys, the best company on earth who everybody wants to invest money into, including Warren Buffett. We all know. I'm just giving us best example. You know, I'm not taking any wrong, because this is rare happens, guys. So something which I mention, emphasize, and people who have a holding their Apple position, please guys, you know, I beg you, I have no any bad intention that hey, your stock is going down, because my goal is not your position. My goal is to teach you what I see, guys, here. Okay, I'm not biased here. My goal is to show you what I see. So please don't think politically that hey, I'm trying to do this. I have a zero position in Apple, guys. Okay, I do not have any position. Normally I don't have position in this market most of the time. Okay, but I'm just disclose myself, I do not have a position in Apple. So again, so I just showed you guys here, this is what exactly just happened right in front of your eyes, which is not happened. Look at that, I showed you, right? 2020 also did not happen. 2000 all the way here when the VIX touched 50, that time it happened. Okay, in 2018 when the QT started, that time it happened. The Apple went down, crossed the 50-day moving average to the 200-day moving average. So that's why I call it the death cross, is right here. And what does that mean, Josh? So what is death cross? Death cross happens, market goes, market has a, this is the best company right now on our S&P 500, right? Number one, which everybody's portfolio has these, maybe all the 401k portfolio has these. So as you can see this chart, the downward trend started. You see this pressure downward, and their market is right now taking the liquidity out of the market, so people will not have the buying power. When people don't have the buying power, they're not gonna go and shop around, and then that's how they try to control the inflation. So that's what they are taking tolls on people's portfolio. So people not gonna go and buy houses, buy cars, spend money anywhere. This is the one assets where they are trying right now, just to let you know. So this is just like there are many different assets they are trying on, equities, on bond, and on real estates, mortgage, different assets they are trying to control that, to bring the inflation down. So now what is this exactly? If you see this here, this is the look like a bear flag to me. If you see, the flag is created again, but we are in the bull territory. Remember, we just broke. Whenever market break, this is a daily chart, each candle represents the 1 day of the work. What does it mean? Each candle represents 1 day work, means one day where all the bulls and bear play. Now what happened is, you can see this is the downward channel. Downward channel means stock is going down. Whenever you break the channel, this is the support and this is the resistance. This support breaks, right? Same thing, resistance. So we support break, but look at the weak under the body. And what did I say at that time? I said I do not like this weak under the body, means there is no strong support here, means it can bounce. And then look what exactly happened, and we broke the trend line. The moment you break the trend line, I say it looks like a bullish to me, and we are in the bull territory. Okay, so now what happened is, what I draw here is the tops are falling. Whenever you see the tops are falling, that is bear sign. So right now where we are here is, are the tops are falling? Well, let's take a look at it. So this is the area what I'm drawing. So what happened here? Tops falling, tops falling, tops falling. So whenever you see tops are falling, that's the bearish sign for the stock. Over here, still we are in a bull, but we need to see whether tops are really falling, or still want to go higher, right? We need to wait for confirmation to break the trend line. So we need to break this for 145 and goes down, right? And the trend is also bull intact. So that's what the Apple probably right now we need to wait for the support. See what happened, this trend line breaks downward, which is, I would say, around 144, guys. If the Apple breaks 144, then Apple game is over for a short term also. So short term it can bounce here and there. If the market goes, Apple can go with it. So that's what I teach here. Market first, market first, market first. Not the Apple first, market first. Okay, so keep those things in mind, guys. Market first, not the Apple first. So if the market going up, S&P 500 going up, then Apple can go with it. Those who do not know, they can join live space where every day I'm here live, morning 9:30 until evening 6 o'clock Eastern time, and I always teach everybody free of charge. Okay, so you can learn out of that. So we will wait for this, whatever the supports happen, but again this is bear flag. So if this bear flag breaks, we can go and test the floor, which would be around 137, and we can go down more also. But this is just the scenario. Now what is the bull scenario? We can test the floor and we can bounce upwards and we can go north also, but still we are in a bull territory. So that can be possible. We have to follow the trend line, and if the trend line breaks, then we will wait for the linear line to test it. If linear line is going to test, and then enters into the bulls and bear territory. So that's how we're gonna watch. Right now the bull territory we are in. We have not broke any linear line, so still everything is intact. But long run, remember this is the death cross. This is the long run, and long run is going down. This is the signal, guys. Excuse me. So this is long run. Okay, keep it in mind that cross always plays a long run. It takes about a week, couple of weeks, 2 weeks, 3 weeks, like that, slowly. But this is the early signals, guys. I'm trying to tell you early signals right here. Okay, so keep it in mind. So I hope those who can see that what I just discussed about it, and then let's take a look at the Tesla now. So what's happening with the Tesla? I'm sure a lot of people have their position on Tesla or not, whatever they are doing, and I'm sure I do not have any position in Tesla, guys. Okay, so because I know many people hate me when I talk about Tesla, but guys, remember, I am not bearish. I buy calls also, and I buy puts also during when I trade, and I treat every stock as not a celebrity. That's what I teach, because we do not want to make a celebrity stock. That's why we lose money. Maybe you can make money in 1 year, but then some point that same the attitude you have, that attitude is make you lose money. Remember what I just said. Keep it in mind. That attitude will make you lose more money because of that. You creating celebrities, because these are stocks. They do not care whether whatever you do, you bull or bear. They don't come to your house and say, hey, you lost money, let me go and pay you. They don't care about that, right? So you should also not care about them, and you just purely play whichever direction you want to play. That's how I teach here, guys. So all right, so let's take a look at what exactly happened here. If you can see my trend line, downward channel trend line is intact. We try to break, and I said, hey, we are breaking, but we got the resistance here, 775. We want to wedge, and now look at the tops are falling. You see this, what I wrote whenever I say tops are falling. Look at tops are falling. Tops are falling. So anything is trying to go up and is getting rejected, trying to go up, getting rejected. So what is this? Lower high. It's not higher high. Lower high, lower low. Lower high, lower low. Lower high, lower low. So the people who don't have experience, they say, oh wow, look at Tesla is going up, that's it, now it's gonna go. That's how they get trapped. So bulls are getting trapped, bears are getting trapped, premiums are getting lost at the end, right? On a Friday comes in. This is what normally happens, guys. So we got to be a little bit intelligent here how you trade. Then over here market sell off, and bam, right? Look what happened. Then we try to break the trend line. We broke the trend line. We try to go up, and then Tesla announced yesterday, I guess, that hey, they're gonna lay off 10% employees. So many people think, oh wow, that's good, because their earning would be good, because they are laying off, so they they have a less expenditure. They have their balance sheet can be improved, because they don't have to pay more salary to employee. But then also other side of the coin also is that hey, company is feeling the pinch. Something is happening within the company. That's why they're losing. That's why they are losing money. And that's why they must be losing money, and that's why they're laying off the people to fulfill their upcoming earning. So that could be another cause, because they have supply constraint. We have to look both the sides. So that's what I feel right now. Tesla is in trouble in terms of fulfill their financials in terms of upcoming earnings. And we all know there is a big shortage, and China was locked down for a few weeks, I would say maybe more than a month, and they are also affecting on that, and that's what is also getting implicated on the stocks also. So that's why the tops are falling early than the S&P 500. So if you look at the chart, this one is falling early, so I do not want to say, hey, these tops has been fallen, still we need to wait for reversal. This VR resistance is there, this trend line, if breaks upward it can go, but if this support breaks right here, which is right here, I wrote $700, this support. So let's take a look at what exactly happening in 30 minutes. Well, where all the bears and bulls are sitting here, right? So let's analyze. So as you can see here, the market has a gap down here. You see there is a gap left here. Okay, so I think market has a support here. This is the critical area right here. You see the 1 2 3 4 5. So this is the support. So if this support breaks, then it can go down. If this support bounce, we can go and test the resistance here, which is around 730, and then we have to fill up the gap around 77. So market would play dirty games in terms of filling up the bulls and bear. So what they can do is they can take it up, and all the bull will be super happy, and then they take it down, and then again take it down probably, and then they take it up. Something like that game can be played, but I do not want to participate early. Let the market maker decide. I announce every time when the market opens up, and slowly whichever direction it goes, and every minutes, every hours we do announce and what are the action happening. Based on that, everybody analyze further and see how their positions are and stuff like that. So this is not a financial advice, guys. Okay, remember this is, you have to do your homework before you enter into any trades. So this is just a technical analysis of my view, which I'm expressing to you. So let's see, this support is a critical area, guys, and then this is the resistance to be bullish. If the resistance goes and break, we have, but remember guys, what I think is we have a major resistance. Why? Because we have a 100-day moving average, 50-day moving average on a 30 minutes. Okay, I'm just looking at 30 minutes. So these are critical area too. So let's see whatever market maker normally, what they do is they always go on a sideways and play little games and fill up all the bulls and fill up all the bears, and then they try to make the money out of premium. That's what they normally does. But again, it's a new week starting, so they're gonna go in they will start the direction and they will change the direction. That's what they do. So you need to take the money when you see and run. Okay, that's what we teach here. Take the money and run whatever direction they start. So daily direction, same thing, guys. Here also we have a death cross on Tesla, and I announced that also. Hey, Tesla has a death cross, and look, same thing. Tesla had is still going up and up and up, and then now we have the death cross right here. You see this right there. So the trend is super duper going to be another bearish trend supposed to start. Whenever you have a death cross, long term, okay, not for next week, I'm saying, guys, okay, not for just a week. It can happen whenever it happens, but whenever you see the death cross, it takes about a month to occur, 2 months to get that happen. And that death cross is happening, and which is bad for the stock. Now I don't want to scare, guys. You have to take your whatever the things are. What I'm just expressing my technical, guys. Okay, I'm sharing my 20-25 year experience. Whatever I see here. Now it's up to you that how you want to analyze. Always do your homework, guys. Okay, always do your homework. Okay, based on somebody thesis, you don't need to go and trade because it's dangerous. You don't want to lose your money. You have to do your proper homework before you take any action. That's my disclaimer, guys. Okay, so this is the support around $620 right here. The support, if this support breaks, then we can go and test this area right here. So pressure is downward, tops are falling. That's what I can see right now. Market maker, whatever they decide, we will see, but I do not want to go first. We will see whatever the new week starting, new option starts, everything game starts new. But the danger game right now here. So that's why we do not take any long position or short position here for overnight. Everything is intraday. That's what I can say. We will see whatever the market goes, but this is just to give you an idea where the market is heading. The pressure is down, tops are falling, tops are falling, tops are falling, tops are falling. Lower low, sorry, lower high, lower low, lower high, lower low, lower high, lower low, right? So we will see how things are rolling, and we'll keep eyes on it. So that's the Tesla, guys. Okay, what next is QQQ. I'm gonna take a look at all QQQ. What QQQ did. All the technology stocks are holding very well at 306 area. So still holding this area, guys. Okay, QQQ is still holding right here. So let me go to the day. again, you know, this is the W pattern is forming on QQQ, guys, just to show you. One W, right? This is the W pattern right here, but does not mean that W can be go and finish. You need a market condition. You need a market. See, if the market goes higher, then this W can be finished. What is W means? It can go higher. Okay, but we need to watch out few things. What need to watch out is right here. We are right here at the neckline. What is the neckline? W neckline. So we need to stay away, you know, upward in order to be bullish. The moment we break this, okay, remember this, okay, let me show you. This is the critical area, guys. You have to keep it in mind. Technology stocks, we are right there where the line is. If the candle closed tomorrow below this, then forget about all the technology stocks. It's heading down. We have a gap here to fill here also around 300. So keep our eyes on here. We will be live. Those who are live, we analyze every moment, every other moment we analyze and see where how the market is behaving, and because critical area to find out. So let's take a look at it, 30-minute chart, and see where the profile is, where the buyers and bulls are fighting. So we are 1, 2, 3, 4 area we've been fighting. You know, the bulls and bears are fighting, and I think that we are right there at the testing at the support area. Same thing. You can see this area is right here, which is 300 critical area. So if this support breaks and test the 300, which is 200 moving average, and if that breaks, bang, hammer down, guys. Okay, keep it in mind. Then can be hammer down, and it might not be good then if that happens. But again, we will see whatever happens. We do not take any position early. The moment those who think they are the best king of the kingdom, they lose the maximum money, guys. Those who take the early decision, because market maker, they change the direction, they create trap. There is no straight line. They create trap. Okay, so those who wait, those who scalp, yeah, if you are smart and scalping every 5 minutes, 10 minutes, absolutely, then you can take advantage. But those who do not have experience in terms of intraday trading, then they have to wait for a proper direction and just wait for the 1 or 2 opportunity to trade. That's how I would say. Do not jump in any bandwagon and you think, oh wow, market is going north in 15-20 minutes, and then everybody's flying high, and then market change the direction, right? Same thing they do opposite also. That's the reason I say wait, because the new week starting. So as I said, this is the bear scenario. When we break that, upward scenario is we need to go and take the at least I need the top, which is 312. At least we need to break this 312, which is 6 handle upward. So we will be you see this ascending support, we need to break above. We need to poke through this and get back above, then is bullish. Until then we need to wait and see what happens, but we have a little battle left here. Whatever the market does, we will watch. But that's why we need to wait and see, analyze, see how the market opens. I do not care about whatever the pre-market would be, bullish or bearish. Those are all trap. I don't give a damn about that. We need to see where the market moves in the when market opens up, and slowly we analyze. That's how you go. Pre-market is just a trap. All right. So that's QQQ. IWM real quick. IWM is Russell 2000. Let's take all the cyclical stocks. Just take a look at it. What exactly happening here? Same thing here. We are testing 187. Bunch of resistance here, guys. Super duper resistance. So these are all horrible. Balance sheet EPS are horrible. That's why this chart looks very vulnerable to me. I know if this goes down, if somehow get rejected, which is around the range is 191, this area, and then if that breaks, we can go and test 195. Then that's it. I think we might be out of the juice with a lot of resistance here. So 195 is the maximum bull side, and the bear side is we need to test 185. If the 185 breaks, which is 30-day moving 30, oh boy. Yeah. Okay, so if I look at it here, yeah, right here, yeah, right there, 182. If the 182 breaks, we're gonna go down. So that's the IWM 182. We're gonna keep eyes on it. Let's see what market does it. We need to go one step at a time on the IWM. All right, so now let's take a look at the oil, right? Everybody wants to take a look at what oil doing. Okay, so when we take a look at the oil, guys, we need to look at a couple of things also before we go and jumping in the oil. So let's take a look at US oil right here. So I'm gonna go to monthly chart because we have to go back to so many. We need to look at the history, what happened in history. So each candle represents 1 month of the work. 1 month, one candle is 1 month. Okay, it's not a daily. This is 1 month of the work. So what does it mean 1 month of the work? Okay, let's go and what happened here. So look at this right now here. Since pandemic finished and then we started, and look where we are. $120 oil is right now. So Josh, what do you think the oil is going? Okay, so oil has a parabolic move, guys. Look at the parabolic move right here. From here to here is a super duper parabolic move on it. And many people, they think, oh wow, the oil gonna go this. And you know what they think of it. They look at the Fibonacci and say, you know what, let me go and look. Oh, let's grab from the top to bottom and grab it, and then they look at it. Oh wow, look at that. These can go to this can go to 129, and then it can go to 209. That's what they can think. These are all anticipation. I call anticipation based on the some number calculation. Okay, this is how think, but I do not like that way thinking. So I just eliminate. If anybody want to think, they can think, but I do not participate in this, so I don't use it. I used to use it, but I cancel myself. I don't use it. So alright, so let's take a look at what exactly oil is happening here. So do you see my oscillator here, where oscillator is going right now? You can see my oscillator is almost up here, that here. So what does mean oscillator? We are running a market is overextended, overbought. This is overbought, so still it can go overbought, which is resistance right here. Now when it is overbought, it can go keep going. Yeah, it can still little bit keep going on that too. Remember what happened here 2008 when we have financial crisis, and then look, bang. So every time I'm gonna show you something, guys. Okay, let me show you something where you can see I tweet. Everything what I do is mostly I tweet, but sometimes when we live, I don't have time doing that. Okay, so and weekend I get some little time, so I can spend some time with you and explain you what I see here. So what we need to do is look at this chart, guys, and this picture is like a one not looking good, but yeah, we'll see here. So you see these are the year 40, 50, 60 when we happened this World War I, Israel oil embargo happened that time. Then we had in 1970 the oil jump. So oil price and annually jump 108%. So right now we have passed 1999, 1974. So right now yearly gain year over year 108% right now is happening. So we are right here at that same territory right here pretty much. So oil has overextended. That's the reason the oscillator also showing that we are overextended. So what does that mean? It cannot go, it can go rejected. No, this is just the technical, guys. Technical can be overruled if the monetary, geopolicy, right, those can be financials, those policy can overrule all the technicals. So we're gonna take a look at few things, because first I want to start with the base. Okay, that's how you can land somewhere. Okay, so hold your breath and hold your thoughts and focus on here what I'm trying to show you. So every time here when you look, this percentage went up right here. Right now let me go back to here, let me show you something. Okay, so let me go back to here. What I trying to show you is, okay, right here, which is right here 2008 oil was $147. So let's open this one. So let's analyze. Okay, because everything is also we need to look at the GDP, because every time, guys, okay, I'm gonna show you right here, every time whenever the oil price goes up, the market crashes. This is the history I'm showing you, guys. Okay, I'm gonna show you history right here. This is your history. Look at this. Everybody knows that. I was in 2000 also, and 2000 also. Look at that. Oil was going up and up and up, and bang. Remember dollar valuation, because we had, this is all the dollar. Don't look at just $120 at that time. How much? What was the value of the $1? That time, what was your salary at in this time, right? 50,000, 40,000, like that. Now salary, people depends on which area, which field you work. That time, you know, the basic salary was $10, $20, or maybe, I don't know, $8, $5. Labor data depends on what. So right now it's different, right? We are double up, right? So the valuation of the dollar has gone up, and that's why we are in the higher number. Okay, but we have to look at the percentage. That's why I'm looking at the percentage, not the number, not like a $40 or $80. We look at the percentage. So every time you can look at it. 2000, look at the date on the bottom when I'm using my cursor right here, when the dot-com bubble happened, and then bang. Remember, this was, I remember 2000 market was super duper flying high, and then 2002 bang, right here, all this happened, right? So this is the oil. So what happens is market is flying high, you always bring the recession with that. So I'm just want to show you here, guys. So if anybody comes, okay, remember these are oil mafias there, and they might hate, because the people who always believe in a one direction, they are the biggest loser. Again, I repeat, the people who believe in a one direction, they are the loser. The people who believe in a north or south, you have to believe in both directions. Again, I repeat, you have to believe in, otherwise the whatever money you made in one direction, one point of time, because of your you are not allowing to alter your mind, you're gonna lose whatever the money you made that particular time. Some point of time you're gonna lose just because of that attitude you had to carry. So be ready to understand and accept and change, you know what I mean? Otherwise this market will take your money, guys. There's a lot of things can happen in your, it could be mafia, it could be, so you know, the oil mafia, it could be a social media, it could be geopolitics, anything can change, and then bang, whenever the parabolic move happens. Remember parabolics, those are things, and I'm trying to show you the history, guys. Okay, this is how it happens. You want to be part of how far. That's why I always say, you know, you have to keep yourself in a limited positions whenever you see money, little bit, and I'm trying to show you here. Okay, so as you can see what happened here, like 2008, and bang, look at, so what is this gross? So whenever the crude, this is the blue line is the oil price, which is right here, crude price, and this is our GDP, this is our economy. Right here the red line is our economy. So economy is going this way, and then market crash, economy crash, and the oil was high, and then bang, then oil high, and then guess what, oil slowly went down. Now what exactly happening now, 2022? Well, look at the oil is going up. Remember, oil is going up, economy is going down, GDP is going down, economy is going down, where we have a highest inflation, right? So these are the same thing is happening, where the cross, you see this cross, so this cross is happening. So GDP is going down, oil is going up, and then oil will hit the resistance and then consolidate. So right now the market gonna go down, equity gonna go down. This is the history I'm just trying to show you. This is whenever we have the cross, oil goes up, we had the coin, oil is going up. How far? Right here. So what happens is, now at this time, what was the value of, so for example, let's take a look at it. Somebody who wants to work in a low labor job, maybe average price used to be $10, $8, I don't know, whatever, depends on which state you are, and now what it is. So maybe 40-50% value gone up, right, from this in 2008. Look at the date, 2008, whatever the salary you had, 40% percentage value gone up of the dollar, right? So then you have to increase that 40%, add it up here. So maybe oil can go to another 180, 175 once we break this. This is, guys, okay, I did not mean to say you hold your oil or whatever it is. I'm applying my brain based on the geopolicy scenario, based on the technicals, and analysis, it can, then again we have to analyze at some point of time. But these are the scenario it looks to me based on technicals, based on geo right here. Now the GDP goes down, oil goes up, and then oil goes down. Remember that always. Now see how the things would be rolling. We will keep our eyes on it, but keep in mind, oil going up, not good for the economy, because how is not good for the economy, guys? Remember this, very important thing. You know that right now all the yeah, I was looking at the data and all, slowly it'll come out, but inventory is piling up, guys. You go to Walmart, you're gonna see a rollback sign now. Rollback, okay, rollback signs are coming in now. So they have a more inventory because they loaded a lot of inventory. Now they are finding less buyer slowly because of money power going away slowly. So what would happen to that? Company EPS goes down, their earning will go down. That's why Amazon price going down, Walmart going down, Target going down, most of the companies. So market always react early, guys. So I'm just trying to tell you that what would happen is the slowly oil also go down, but not immediately, because still there is the logistic will be in the play. But slowly remember Walmart is, oh, we need drivers, we need trucks, we need this, but hey, if the inventory is not selling, they don't need drivers, right? That slowly happens. Any changes happen, but you're not gonna see on your front of your eyes. Slowly number comes out, and then you'll be able to see. That's why we gives all early alerts, guys. Hey, this changing is happening. Slowly can happen. You got to give about a quarter, and then the number comes out, and then market reacts. So I just wanted to show you that inventory is now piling up. Rollback is coming in at the Walmarts. Just to let you know, Walmart, and then remember Tesla is also started laying off. Carvana started laying off. So people started feeling the pinch. Hey, there is a little issues, whatever the financial crunch they have. That's what slowly every company wants to perform their earning, otherwise stock price goes down. That's their first priority. That's why they lay off. So whatever people are making money right now, whatever the salary has, imagine. So you go to the pump and say, hey, I used to fill up my car, sedan car or truck car, whatever the price used to pay, $100 or $200. Some people showed me the receipt of $150, $200. So that is a lot of money. So that means people they have no choice but to fill up a gas, just like you have to fill up your belly to eat a food, right? Just same thing. If you want to travel to the job, you got to fill up. So you are putting extra money from your pocket. What does that mean? That means the less money you will have to spend for something else, right? And these cannot continue on and on and on. Remember, guys, if any mafia comes to you and say, hey, this is gonna go to this and this is gonna go to that, but if there is no demand, slowly demand comes down also. Okay, there is a policy applied, there's a lot of thing comes into it, then every equation changes. You do not want to be part of that trap of social media. You do not want to be part of those mafia. They have a one direction goal. Okay, you need to be smart. If you are a part of the top trading edge community, you need to keep your eyes open and alert and analyze one step at a time, because direction can change. In that direction, you don't want to be trapped in one direction. Okay, so what I think is slowly the people will not, because right now people have a, they would have a less money power as the time goes by, because they have to put more money toward the gas. Imagine who gonna spend $1,000 on gas every month. It's a lot. If I may ask everybody, $200, $150 every 3 days, 4 days is a lot. You're spending $1,000 on just the gas. People don't pay. Look at the rent going up, right? So inflation is too high for that, and slowly what happens is it comes down, because people won't be able to afford that. It's always solution comes out after, and that's what I'm trying to show you the chart here. This is the chart. It happens. It goes up, and it goes down. It goes up, it goes down. And GDP goes down, has no choice but to come down, because people will have a less money to go and spend due to the war situation happen and all these things. But slowly all the geopolicy will get into effect, and things can change. How long? I'm not saying it's going to happen next week, but things can change in a quarter, or maybe in a month, maybe quarter, maybe 2 quarters. But just keep it in mind. So these are the monetary policy. We have to keep it in mind. It can change, and once the oil can change, then inventory powers yeah, the thing can change a lot. So I'm gonna go through one step at a time. Okay, so I went through this, then I went to the oil things video, then okay, US economy. So let's take a look at it, what exactly happening in let's take a look at the job market. So central bank just getting started to fund fair. Okay, so what did I tweet here, guys, is right here. Small business started feeling the pain as economical Fed fund getting tightened more. So when we all know that Fed had just announced they're gonna start doing QT. When they start doing the QT, what would happen is the market will start feeling the pinch and liquidity goes out of the market. Normally that's what exactly happens. Liquidity go out of the market, and slowly what happened to the job data will affect. So right now we have excellent job data, but I need to keep it in mind to you everybody that hey, this can change everything. So as you can see here, the Fed fund, and we're gonna take a look at the job open. Remember the business jobs, all the small businesses, we are right now small businesses, they are opening, and that right here job data is slowly they're gonna lay off. Now opening is going down. You remember all the job opening slowly goes down, right? That's what we need to keep it in mind. If this number changes, we're gonna keep our eyes on it, and we will keep posting. But this doesn't happen in 1 day or 1 week or 2 weeks or 3 weeks. It's slowly we got to see by the quarter, you got by the month, and the thing can change. And based on that, we're gonna analyze it. That hey, now the market liquidity Fed fund is going, balance sheet going down, and slowly the Fed fund, the opening job data gonna go reduce slowly because people will not have the money power. Just like Tesla announced, hey, we need to lay off little people. Same thing, many company will come, and then this goes down because liquidity goes out of the market, right? Liquidity goes out of the market, and that normally happens. This is the early sign. I'm just trying to show you guys. Okay, I like to think too early to check everything, because surrounding clouds are getting darker and darker, and we need to keep eyes on it. Based on that, we have to see the cloud which direction is heading, market is heading. Slowly we need to see. And then okay, so right here, this is same thing here, job opening right here. As you can see, the job opening now turning down, and our equity market going down. Whenever the equity goes higher and the job also go higher, we have now the equity market going down. Whenever you see this, equity market is going down, the job market also, because of the Fed, I just showed you about the Fed tightening the policy. When that happens, this also goes down. So this is too early. We're just showing you the indicator that is slowly pointing down, and this is just the started. We are at the top of the top peak right here, and then whenever changes happen, we're gonna keep eyes on it and see whenever the changes happen. But look like it's happening slowly. We're gonna keep eye on those. Now also I need to keep a eye on the biggest right here. So I tweet about this one. What is this 12-year bull run of the tech sector? Where it is heading now? Please join. So let's see what exactly doing this. As I said here, the 2009, when market started slowly, all the technology stock was flying high. As you can see, the central bank liquidity and the market. So what happening is, this is the market. The light blue is is all Amazon, Facebook, Google, Microsoft, all the big company, right? Who has the strongest balance sheet, and they were flying high. And now we need to take a look at the liquidity in the market of the tech. So central bank liquidity. Now what exactly happening is, here we are crossing the line here, forecasting. So whenever we cross the liquidity in the market, so these companies right now is losing the strength in the market, and this boom linear line can be tested, guys. How far it can go? Maybe here, it can go up to here also. So this is just it depends on how this recession will be played, because market central bank just started, guys, QT. Remember, they just started the QT, and slowly they're starting now, and see how the money get pulled out of the equity and where all money travels. So but I just want to show you the indicator that is happening, and right here is happening. We have a lot more money to pull out of the equity in a market, but I just want to show you. I right here. Sorry, let me see another one right here. So where the monies are moving into, well, you know that many people are you know that all the bond market, when we look at the bond market, the highest corporate high yield bond where the money is moving into right now, because the reverse repo market and all that market has the yield is going up, the coupon rate is going up, so people most of the investors, they're moving money into this is what it shows up here right now. So at this point the money moving here, as you can see that money moving out of the mortgage backed security because they are vulnerable, right? Gold and silver is just a little staying at that. Bank loan, people don't want to invest into bank. Credit market, no. So basically even government treasury is no, but they are right now going into corporate high yield bond. People are putting money into it. So that's what I try to show you, that hey, money moving in somewhere where the equity pulling out of it, and that's why I was showing you here that money going out of equity. This is lighter blue line, which is all Apple, Amazon, Facebook, Google equity going out of it. You see that? And market just started the liquidity, pulling the liquidity out of the market. So this is what exactly happening right now. So these are the economical indicators, guys, and monetary policy taking place for the central bank. See how things get played slowly, and then we'll see how thing goes. So this is looks to me right now at this particular point that market have a little as we all know that SPY. Sorry, let me go and show you here. Okay, so the SPY is right now consolidating here, and we're gonna go with the one step at a time and see how things. We are still in the bull run, and the bull run is intact, and we have to look at the resistance and support, and based on that we play. But I just want to show you overall economy we have to follow by all the data, economical data which we discuss. This is what we follow. Slowly any changes happens, we announce. When we are live, I announce every time. We discuss lots of things, guys. We discuss lot of things we discuss. So those who want to participate in community is free. Remember, that's the one most important part, is there is no scam here. You can be free. I'm not associated with anything. I don't have any positions where you'd have to worry about it. Nothing. Just like to teach people, and they can learn out of it. I hope everybody learn, and share with people and friends and family, and explain them that hey, don't be a dummies like others and just go into the trades and lose all the money, guys. Market take care all the money, guys. I'm telling you, I can see exactly how people are losing money. So it's very difficult to go and join in the social media bandwagon and lose all the money. It's very easy to lose money into that. So be careful on it. All right. Then what else? Okay, let's take a look at the VIX volatility. So what I was trying to show here, guys, those who are always look at the volatility in the market index, and volatility index is going down whenever we test. So what I do is, okay, so every time I remember when we were here, I said that hey, right here when we were here, and no, we were here and we bounced, and I announced that hey, we were just like this. And I said that on a Sunday, say hey, we're gonna this would be a good. Now is market is support found. It can bounce and it can go, and then market market dump. VIX goes up. Now the market is going down. Market is going up. VIX is going down. So I draw the trend line, guys, right here around 24. VIX has a support, and 200 moving average is $23 support. This is major support. Look at the history, guys. Okay, so we have us diagonally going upwards, and slowly the support can bounce. We got to keep eyes on it. If this brown trend line breaks, it can go upwards. So this is just to show you, because right here I announced that hey, we're gonna break this trend line, and it broke. I did tweet. So many tweets I tweet, guys. Okay, and I mentioned, but I don't go and open all these things, but you can see that. So I did tweet. So if the VIX goes down, market goes up. VIX goes up, market goes down. So we're gonna keep eyes on it. We are about to test the floor, so market can reverse anytime. We don't know when would be happen. We're gonna keep eyes on it, right? So still market is down. I mean the VIX is down, market is up. So that is the one thing. And if you want to look at the overall, which I always, those who joined first time or second time, I don't know, but I did discuss last time this. So hey, VIX touch 50, cross 50 time when we were in 2015, 2018. Jerome Powell was there. Over here Bernanke was there, I guess. This time was Jerome Powell. This is Jerome Powell. Both the time Fed captain was Jerome Powell. We did not test in 2022 yet 50. We did not cross this. This is the landmark. So I feel some point of time we might test this, but they want to do a soft landing. I don't know how they're gonna do a soft landing with all the QT. We're gonna keep eyes on it slowly. But just to show you guys, this is monthly chart. 2018 we tested 50, 2020. So I feel like one point of time your market might test this, but when we'll see. Okay, when the QT starts, all the earning comes out and market will smell something about it, job data goes down and all these things happen. That time market goes into domino effect, guys. And we just started the QT, and September they're gonna double it up. At that time we need to keep. So we all need, market is all about the earnings. You know, if the earning data comes out and it's not gonna be good, slowly in the second quarter, third quarter, and fourth quarter, I think would be a little difficult, because energy price and all this, everything, inflation is high everywhere. Everything is going up through the roof, guys. So that thing can happen. All right. So I'm gonna open up the space for everybody who wants to, have any questions. I will take the questions, so you can request yourself and you can let me know if anybody has a question. Just request yourself, or you can come forward and let me know. Those who are on YouTube also, they can ask the questions. Oh, somebody asking me on YouTube, I have Apple puts. Keep talking, Josh. Apple puts. No, Apple puts, I understand Apple puts you have, but always try to, guys, be careful on Apple puts. Keeping overnight, man, you guys are crazy. Hold on, let me see. Apple, we already discussed. So Apple is right here. We'll see whatever happens. Apple has a gap. So look, Apple has a gap, guys. Okay, those who are intraday, keep it in mind. There is a gap to be filled. Let me see where the gap is. Right there. And there's a gap here. Oh, gap is already filled. 30 minutes. Oh, I think.
Josh.
Yeah, it's filled. Yeah, what's up, man?
On Apple, Trader Tony brought up some dark pool data about a large group of puts being open up on Apple. And my question is about gamma squeeze. When the market makers have to cover those large put positions that have been opened up, is it more likely, like higher percentage, that you're going to see Apple pump up as the market maker buys shares to cover their gamma exposure on those puts?
Yeah, that can happen too. So I mean, we're gonna take a look at the flow when the market is open, and we'll check around few things and see how the Apple flow is going in. That's why, we'll see when the market opens up, and we analyze at that time, see how the flow is looking. And
thank you, Josh.
Yeah, we'll look at all the open positions of the upcoming weeks, as well as we're gonna look at one more extra week also, and we'll see. And so those who are new here, join. When we are live, and we'll go through that and show you what we think of it. Okay, then, man, a lot of people are on Apple put. Somebody asking me about a CRM on a Discord. CRM is okay, guys. So CRM hit the resistance area right here. We have a resistance at around 200, 197, 195. And their earning was great, but CRM 98. So CRM is overpriced, guys. Okay, on a financial side point of view, if I analyze it, CRM is overpriced. So if market first, if the market goes higher, maybe it might be able to test 189, but I don't see CRM flying super high, anything like that. Okay, because of the financial foundation is weak. comparatively because of the forward P ratio, based on the EPS is 98 cent. 98 cent is double this, so this has a lot more room to go down instead of going up. Though earning was good, but that earning, based on this earning, I'm telling you that CRM has a lot more room to go down than the up. Maybe you hate me if you have any positions or not, but please, I'm just telling you based on the financial, they have a lot of weakness. There's a gap down here to fill also. Right here is the gap. That gap need to be filled. Okay, when, I don't know, we will go one step at a time, but the pressure is downward. When market goes down, then this stock can go down faster than anything. So this one has a pressure down actually. Right here.
For anybody just joining us or not used to how we do things in Top Trading Edge, you can click on the link up in the nest in the Twitter space and follow Josh's screen and watch as he goes through these charts while he's answering our questions. So go ahead and click on that if you want to, and you can follow along and watch the screen live.
Thanks, Tim. I appreciate, man. Somebody's asking me about the Amazon, and this is what Amazon thoughts on impact on Amazon stock split, short-term price action. All right, so split is going on here, and remember, guys, whenever the fresh wick starts, right? So fresh wick starts with the trap. Market maker doesn't go with your direction. Market maker will set up a trap because split start, everybody think, oh wow, it's gonna go higher. Okay, so according to me, the Amazon just got rejected here at 2450, 2440 here, right? This area rejected. Now, if the market goes higher, then we need to break this resistance, which is 2500. 2500 is a resistance. That resistance breaks, which is I mentioned here. With this, I mentioned way above here, way back, and say, hey, once we break this, we played solid bullish on Apple, on Amazon, and it was great, right? These are the great. Now hit the resistance. When we hit the resistance, guys, I'm bearish. Once we break the resistance, bullish, and then we can go to 2618 right here. We did all this thing before. W pattern I draw. This is W pattern. Look like, either you can look W from here to here we finish, or you can do from here to here, right here. But what we need is right now, it's not about one step at a time. We need to break this to be bullish, and split is coming. Market can set up a trap, and it can go higher, try to break and fake out, and bang, it can reject also, right? That's why right now having a long position Amazon is dangerous. Why? Because financial fundamentals are super duper weak. I just showed you inventories are piling up, and people don't have the money power, slowly going down, and these horrible earnings, negative EPS, and their forecast EPS is $3, which is dangerous, and it's super expensive stock. That's why my price prediction was $1,500. Many people would not agree, but I said from here, and that's why the stock is here. But guys, okay, I think whatever I feel, that's what I'm going to express. Doesn't mean you have to do your homework before you jump in any bandwagon. For me, Amazon, I'm super duper long-term bearish, but I always play intraday right now because the dirty games are going on in the market, and you just play intraday whichever direction you want to play. Analyze yourself, but I'm overall Amazon is super duper expensive based on financial based on the financials. Foundation is super duper weak. Show me the money, I'll show you the money. That's what I teach. Show me the money, I show you the money. The EPS is going down. EPS is going down means I'm not gonna pay that the P ratio or forward P ratio gonna be super high. I'm not gonna pay 200 time value, right? Because look at 2500. So if I look at my math based on, let's look at what Amazon is saying. Amazon is saying, hey, I'm gonna achieve $3 EPS for next quarter. Let's say last quarter they miss, okay? They miss negative, guys, negative. Let's think they're gonna make it positive. So they say they're gonna be positive $3. So if I look at $3, which is 12, and right now price is around 2500 divided by 12 comes out 208 times. So Amazon is saying I'm expensive, than Apple. Apple is 29 times. Amazon is saying, hey, if you want to buy my stock, you have to pay 208 times a dollar value. I'm not gonna pay 108 times. You know what I mean? They are telling me to go, buy. You go to Nike shoes and Nike showroom and say, hey, this shoes is $100, other shoes is 120, other shoes 150. But Amazon shoes is laying over same place. He say this is $10,000 shoes. Would you pay $10,000? Something like this. I feel like this year. So I'm when you shop around, you need to know what price you're paying. People do not have experience, knowledge. Please, we are always live to help you, guide you, and then you do your homework, and that's how you analyze, and then you go with it. Otherwise, people can fool you in this market. I'm here to teach you how to not to get fooled. Okay, so that's why I think Amazon is super expensive. It show me the money, and then I'll change my directions. That's how I would say. Okay, so again, please don't feel bad if it is just to let you know, guys. Okay, I know people could have positions, and but please, I'm always live here to help navigate and help, guys. Okay, then please, Joe, come on. What's up, Joe? You raise your hands.
Hey, Josh, you're awesome. Thank you.
Thank you, man.
I loved all your references to the mafia. That was great. I think you're right. Everybody needs to do their own due diligence and play both sides, because nobody should be getting hurt in these markets. Be vigilant. Did I hear you correctly when you said the upward bound of oil could be about 180 for this move? And if not, what kind of range do you see oil trading in going forward here in the near term?
Yeah, I did mention. So so if I take a look at the monthly chart, remember that 2008, the money value of the dollar, we had to add that on top of this. So right now resistance is 147, 150 area. Once we break that resistance, then we have to also remember these are all technicals. Geopolitics can overrules all this, what I'm saying. If tomorrow any changes comes, we don't know. Any changes can come out from the government and they announce, then it can change. But at this point right now, technical is telling that we are heading to resistance, which is 147. Now how far it can go if there is no policy changing and things still have a big shortage on energies, and then we have to add up around another value, which another value I would say about say for example at 2008, what was the salary of everybody's, just like that. So whatever the price went up, similarly you have to add up that little percentage of that. So people used to make a $8 I don't know, $10 salary, now is what, $15. So another value you got to add on top. So maybe another value you got to go anything below 200, it can go test 185, 175, 185. You just add it up a little bit more on top. That's how I would analyze. But remember, right now what started happening is whenever the economy indicators, remember GDP, when the GDP economy indicator goes down, then the oil can also comes with it, because that's what is happening in the history, what I was trying to show you here. Whenever you look at this, right here, oil 147 now. So we have to keep this GDP in mind. So oil is going up and up and up, and then at some point of time when anything changes happen, because people are, remember, liquidity, we do not need to forget this, that when total inventory goes, the inventory goes piles up of Walmart, Targets, Amazon, their earning goes down, they're not going to hire people, right? They're going to lay off people. And then when lay off the people, what happens is people who have a liquidity crunch. On top, Fed is also shrinking the balance sheet. So that also creates the market GDP, the equity goes down. The market people don't go and invest money into it. So money getting pulled out of the market. People have less money to spend. And imagine if your rent is, I don't know, depends on city to city, but if you're paying, I live in New Jersey area here, that you live in 2-bedroom, you got to pay around $2,200, $2,500 rent, plus you pay $1,000 on your traveling. If you want to travel to New York every day, I'm sure you're gonna pay around $1,500. If you, I'm sure over here maybe $1,000 gas. Just do your math. Plus your food, plus this. So you basically you whatever you're doing is you have to make a good amount of money in order to be, if you're making $20-$30, there is no way you can survive, right? That's the reason I'm saying that, hey, think equation can change other direction, because then people will not have the money power to spend money on gas, and that's how slowly direction can change. The way right now is parabolic move, that direction can change because there's a limit to go up, right? There's a limit to go up, and that's how things are. So if you look at this chart, it did go up, and the limit is probably the resistance. I think it could be, once we cross that, it can go 185. That's just too early to predict price right now. We need to one step at a time, because we are into the parabolic moves on US oil right now. We are already up. I'm not saying it can go up. We have the resistance at 147, and then once it breaks, then it can go up. And then we have to add up the percentage of this, where the dollar value was here and dollar value here. It's gonna be pain on the neck. I'm telling you, whenever this goes up, it's always market economy goes down super duper bad. Whenever the oil goes up, economy goes into the turmoil. It's history repeats, and that's what I'm trying to show here. History repeats. Every time this goes up, this goes down. Same thing 2009. Look at the GDP, it goes down. It always happens. So the cycle is, and then oil goes down after that. So it's a year, 2 years, like the cycle goes through.
Hey Josh.
Hey, what's up, man?
Hey, how's it going?
Good, man. What's up?
So just a question. I see lots of put for Facebook and Netflix. They are coming June 17, so above 50 million. So can you check them out? Can you analyze them for me?
Facebook?
Yes, Facebook and Netflix.
Alright, so this right side is all the puts coming in, and this is the heat map. This is this week, and this is the next week. But I would say, let me look at the technicals right now. So, oh sorry, I gotta go daily chart. Let me see daily. Alrighty, so Facebook got rejected at the resistance right here, and we have 50-day moving average resistance 205. So Facebook getting rejected. So guys, Facebook are looking weak to me. Oscillator also telling me we are negative territory right now, and it's just trending sideways, guys. So I would say Facebook has a downward pressure then upward. Downward pressure then upward. Though the financial is strong, but something is cooking because excuse me. I think from the upper level, I think people are leaving the company. That's not a good sign, and I think resistance also, we need to break this resistance. So let's see how this resistance breaks upwards or downward. The way we have bunch of strong resistance here. Once we break 185, I think Facebook gonna go 176. And once we take that, the pressure is downward. The trend market did go up, but Facebook did not go crazy high. So the trend is downward. The wedge is created. This wedge is little downward. Maybe this support, which is 185. 185 is the major support. Once that support breaks, then we can go and test 176. Yeah. So this support, remember, support can bounce also and little go up, and then it get consolidated here too. So we need to wait for this wedge to finish and see which direction it is compressing right now. So it's nothing going to happen immediately. It can happen. I'm not saying nothing going to happen. It can happen. It can break early, or it can break down now, or upward. But the pressure is downward because we have upward resistance here. So the new week starts, and week is starting a fresh week, so we got to give a little time, see how things are rolling.
And the other one, Josh, is Netflix.
Oh, Netflix. Oh wow, Netflix is basically not doing anything, and it's just consolidating. So based on this chart, is telling me that I would not touch this. Yeah, so the area is right here, 176, 209. The market bounce, that's why it little bounce, but it's just 30 minutes. Let me see. Yeah. So as long as this trend is upward trend is intact, which is a rising bottom is good. The trend breaks, which is I need this 180 190. If the Netflix breaks 190, then we're gonna go and test 177. So 190 and 177. If this breaks, remember this. We need to break this. If you are short side, and this is the trend to break. First trend to break. When the trend breaks, then you can test this 189, 190, and then you can go. If that 190 breaks, then then you can go down. Until that, it still is called rising bottom. Rising bottom is strong bullish. Still bullish on intraday. Remember, this is for this upcoming week. Still a little bullish, but we need to see how far it goes. Whatever it happens, we have to go one step at a time.
Okay, thanks.
No problem. Next, Stonk. What's up?
Hey, how's it going? Can you hear me?
Yep. Go ahead.
Yeah, okay. So there's a S&P rebalance this month. Just curious what your take is usually on the rebalance. What kind of behaviors are we expecting to see on options as we approach the rebalance?
Yeah, so I mean, I always look at the technical projections, and based on that, what the rebalancing they do, and I think that's what it's been doing last few time. It's been quite a bit now, few days. So until the trend change, I'm just gonna hold on to that, So let the price action begins, and so how it reacts based on that will go. Let the trend change. I do not see any trend change right now, so I'm gonna just follow whatever the price is showing me. It's just I did mention in the morning, not morning, but when I started the session about an hour 30-40 minutes ago, and I went through the whole SPY in depth analysis. So if you want to rewind, you can see that what exactly I mentioned. But looks like it's consolidating at this point, and let that trend change, and then we go with that. So the trend line is ascending support right here. It breaks, which is 410. It breaks. Then we have the major support, which is 405. That's the major support I need. If that support breaks, then only I'm gonna be a short side. Otherwise, this could be a fake out one day, and then it can bounce. But if this major support is ascending support right here, this support is important right now, which is we are about to testing right now. But if it is bounce, which is ascending, which as you can see, ascending support is testing right now, and that's bullish. It can go and bounce north, right? Still is intact. The support, sloping support is intact. Ascending triangle, as you can see, that is a bullish sign. But we need to see whatever the market does. It breaks downward, then it's bearish. But then we have a support here, which is 406. So 406 is the major one. This one is also major, which is 410. So market can go and fake out and then bounce. Many dirty game can be played. That's why we have critical zone here at area. But if it breaks 416, 417, yes, absolutely. Long term is looking right. The way it looks to me, W pattern supposed to finish. We might go and test 425. When it's not going to happen overnight. Market creates all the bulls and bear as a trap, and then you can change the direction. That's why I tell people to wait for the time, and then whenever that happens, once the tops get, like you said, tops are falling, tops falling. I need to wait for the tops to falling. If the tops falling or not, I need to check, and that's why I need the trend. Once the trend breaks, then I need the linear line to be tested. Once the linear line get broken, then I will change my direction. Until then, we are just still bullish.
Yeah, thanks. What about like on the day of the rebalance? Sometimes we have powerful moves. In the last hour, they're just crazy moves because the rebalancing. Is there? What are some things we can look for on those days where there's going to be a massive move on rebalance day?
Oh, massive moves on rebalancing. Yeah, it can happen. So what I don't take any early position, guys. I do not carry overnight SPY. So, and I don't like to teach people here to be holding overnight. So if anybody want to play, I tell them to overnight would be SPX, not the SPY. You got to be very careful on it. As long as you have monthly options, then you'll be safe. But holding SPY is very very dangerous. So we it's like going early is very dangerous for SPY. So what I feel more beneficial when you do day trading on this kind of market conditions, and scalping is the best strategy. That's what we do live, and it benefit the maximum rather than trading on holding overnight on expecting that hey, market gonna do this and market gonna do this, and then it doesn't happen. It can change any directions and we lose the money. So whenever the direction change, I will come to know first. We'll keep our eyes on direction changes. Next.
Hey Josh, did I just hear you say that SPY is more dangerous than SPX?
No. Not options. When somebody buys option on SPY, you have only you have 1 day, right? 2 days, 3 days. Those are daily options. When you play SPX, you have a monthly options. You can play weekly options on SPX. So those are little safer. Though the bid and ask difference is there, but you have at least more leverage, time leverage in SPX options. Mostly people play
Right.
options.
Now SPX is more leveraged, but I mean you can buy SPY all the way a year out.
Oh, absolutely. Why not? You can buy yearly out too,
Okay.
but you're gonna pay. You can hold. You can pay more premium on that too. Absolutely. Why not? You can play. You can buy that one. It's a similar thing.
I just don't understand your statement. I don't get it. I'm just looking for clarity for my own self because I'm in an SPY trade.
Yeah.
I mean long term. Yeah.
Absolutely.
And I don't find that anymore. I mean, it's way less dangerous than SPX because SPX is cash settled, not SPY.
Okay. So SPX, they have the monthly options. So when you pick a monthly option, what happen is the premium wise, the theta decay, you have to analyze those things. Based on that, I'm talking about. I'm not talking about just you can hold both. It's up to you. That's fine. But the theta decay, you have to analyze that. You have to analyze the implied volatility, and you have to analyze not just that. You have to analyze all this combination, and that's why I always say SPX is better than the SPY for the longer term, like monthly, whatever the position you're holding on it. You have to look at not only just the premium. You have to look at the IV also. You have to look at the theta also.
Yeah, no, for sure. Okay, thanks.
No problem.
Hey Josh, what's up, bro?
What's
I'm
up,
looking
man?
I'm looking at your charts right now. Can you tell me what those lines are at? You have right below our last candle. That's 406, right?
Man, you just joined?
No, I've been here the whole time. But that one right below the last candle on the SPY on the daily chart, that's that line.
Oh, this line?
That's 406, right?
Yeah.
No. Just leave it right there. That's 406.
Yeah.
Right, that line. And then what's the line below that? Is it right at 400?
Yep, 398.44.
398.44, and then your next one is 380, or what is that?
Yeah, this is 380.
And the next one's 380. Okay, thanks.
Yeah, no, I mean, really, the reality is we're just in this channel, right, Josh? I mean, from like 406 to, whatever, 416, 418. And I think we're just going to bounce around here for a while until we actually see a breakout. What do you think?
Angela, I just mentioned everything about that. I think we are in a bull territory right now. Only thing is the channel is testing so if I look at the 30 minutes chart and if I analyze it, I feel like we are this is the bull trend, which is ascending triangle. Support is about to test. If this support breaks, then that's it, game over. And the candle close below, this is not good, and then still I would give a fake out maybe chance, and if it is 406 get tested, then the whole trend can change, anything can change, then that's it. So but again, we analyze as the days goes by. So these are the bear scenario. That's why we are at a critical stage. Nobody knows market direction, and I don't like to teach my audience that, hey, you got to be all time bullish, or I like to give both the scenario, because market resistance is here. We need to break the resistance, then gonna be bullish. So let the whole new week starts. It's a fresh week for the market makers, and see how which direction they are choosing. They might go in the morning. It could be any direction. It could be a trap, and that's why I like to go with the see how they are choosing which path, which direction they are choosing, and based on that I like to go. And as you know, this is what I like to feel about it. Based on just right now, say, hey, is going to test the floor, and then they do non break, and they go north, and then all the bear could be losing money. Same thing here. Market gonna go upward, and then they break the downward. It can happen. So right now is a very critical area.
Feel it right. Yeah. Feel the same way. I mean, we're at key levels right now. We're going to go either way.
Yep.
Break or go up.
Hey Josh, I would like to know what you think about this dynamic trend line on the SPY. If you put it on a 4-hour, you can see it a little better. On a 4-hour?
Yeah. No, I don't use forward, but if you use Sigma, you're good at it.
It's just easier to see this, and you see starting, if you go back to March 29th. March 29th. Oh, you have it there, that line. The line that's coming down.
March 29, March 29.
Right below 420, I think. No, that's the wrong one. If you look on March 29th is where it starts.
March 29 is here on the top.
Yeah, right at the top. If you do a line from there, connect it there to there. Okay, never mind. It looks like you have it right on that. What would you call it? Dynamic trend line, or?
Yeah, 450, 460.
460.
450 at 75.
Yeah, if you come down to where we're about to touch it, what do you think about that line? If that comes to that 420 mark when we touch it, right? Around 420, 419. So do you think that's a real pivotal point if we break that or get rejected off that?
Right here, this is the line I draw here, which is 200 moving average, which is 425. So we can go diagonally. The resistance, we have the sloping resistance, 425 right here.
Yeah, how important do you think this line is?
Oh, very, very important, man. We have a bunch of resistance, but I got to go to daily chart because it's 4 minutes. So what I do is at daily chart, I need to see 50-day moving average, which is right here, 425 area, 425, 424 area right here. Once that breaks, then we have right here, the sloping resistance come from all the way here, and then we have this. So bunch of resistance we have, very, very lot of resistance. 1, 2, 3, 4. Between 430 and these, you have a bunch of resistance. And I'm sure market right now, remember we don't have whatever the earnings are. Let's see how things are, man. Right now the whole thing is QT starting. We do not know how they'll be, how thing will be managed. So it's just right now in a bull territory. That's what I would say. So let's play right now. Is what I would say. Just keep it intraday right now. Is dangerous game right now. Intraday is the best.
So are you still not swinging those puts or calls or anything right now?
No, I have my few puts, but they are already washed out. But I only remember I exit everything. I exit here my 80% position, and I announce that, hey, this is the landmark area, and I don't like to keep in any position. I have my 20% position open on like horrible balance sheet of W and MSTR and all those.
And at the top of your rectangle there that you have. What is that? That's 416. Your the second last candle.
This one.
Here where it does. Yeah, what's the top of that? You have 416.71.
This one.
No, right, the top of this one that you're in right now. Yeah. 416.59. So we have to get through that 416.59, and then we have 420.
Yeah, right.
And then after 420 we have 430. So we have a lot of resistance.
Yeah, right. Yep. Market is the whole new week star sigma, so it could be they might set up a trap. That's what I tell you. Whichever direction it goes, it will be a trap. We gotta be very careful. They might fake and they might fake out a couple of times, not only one direction. One or two times they will do, and then they will change the right direction. So gotta be very careful. It's a new week starting. Yeah.
Yes, sir.
Yeah. All right, Brendan, you got a question?
Oh, I was just going to say, yeah, let's definitely wait for the market direction. But what I'm thinking is just so looking at the charts is, Josh, I agree with your levels. So if we break that 407, that 406, we can get short. I think we're going to pop down to that 398 like Sigma and you guys talked about. That definitely will be a good 50% gain. But, you know, definitely intraday, and let's definitely wait for the market.
Yep, 100% guys. We need to give a lot of time for the market. Remember, don't need to jump in short side or long side. Remember, you got to give a time. You know, you don't want to lose any money. Either direction. Otherwise, you know, it's dangerous.
And it can easily go up to those levels you guys were just talking about too.
Absolutely.
So we just gotta wait.
Absolutely.
But there's a big pop down. I mean, either way, it's kind of an interesting gap going on.
Mm-hmm. Yeah. Yep, absolutely. We'll see whatever it happens. Yeah. Okay. Somebody asking me about the FI on YouTube. Somebody say, hey, your view on a shop for swing trade. Josh, your view on a shop for shopping. Guys, whenever you type your symbol, make sure you type it in a capital. So at least I hope this is what you are asking me about Shopify. So Shopify, we have the channel. You see this channel? That's what we need to remember, this channel right now. So Shopify is trending in between these channels. So Shopify is not going anywhere, guys. In between channel, if this channel breaks downward, which is 311, we're gonna go down. If channel breaks upward, which is 395, 400 area, then we can go upwards. That's what the channel is all about. It's just in between this is playing channel, guys. So right now the pressure is downward, but remember, market first. Let's see the market goes north. Shopify can go also sideways north. If the market goes south, then Shopify gonna go and test the floor, which is 330. So it's a little area, but if you ask me, that balance sheet is horrible. So Shopify has a downward pressure, and that's what is looking like. You see this pressure, super duper downward. It did not even bounce too much. You know, it doesn't have the financial foundation is weak on Shopify. It could be a growth, it could be future, and it could be anything. But at this point, show me the money, and in this scenario, they could not show me the good money, so I'm bearish in terms of. But right now it's sideways. Remember, when it is short term, long term, you have to analyze. So I would only play intraday here in this game. If market goes up or down, that's how I would play. I would not have a long position on this one until market direction change. Okay, so we need to wait for the direction. That's what I would say right now. Okay, chart for FIVE. FIVE, wow, what is this? FIVE is a FIVE retail group. Wow, this is going down, man. Retail group. Man, this is beautiful. Look at this shot, guys. Retail group is going down. Okay, so this is.
What is this? Is this like retail stores or something?
Yeah, look like a retail group or something like that. Anybody knows about this one?
Doesn't Five have earnings coming up this week?
Whoa, what?
What's that?
What is this five? What is this five? Anybody knows about this five?
No clue.
Because the earning is 61 EPS, man. I don't know why retail company. They might be vulnerable. This is this is below 5. Is this below 5? But it says over here it's a retail group. X5 retail group. Nevada NV. I don't know what it is. I need to find out.
Yeah, this is 5 below.
Is this?
FIVE. 5 below has earnings coming up. I thought I saw them on the calendar.
Okay. Let's take a look at it.
June 8th in the evening. So they're after hours on June 8th.
Hold on, let's analyze it. Actually, this is something interesting to me too. FIVE. Okay. Oh yeah. FIVE and $130 over here. It shows me $800 FIVE. Maybe I typed the wrong, guys. Okay, sorry. Let me see. I picked up the wrong. Why below? Yep, right here wrong. I picked up the wrong one. That's why. FIVE, man, is a critical area, guys. FIVE. So 249 is undervalued. If the stock is undervalued, but they're expecting EPS is 58 cents only, guys. 58 cents. So they can definitely beat this EPS, I guess. They can beat this 58 versus 259. So be careful. It could be, they always beat the earning, guys. Always. So I would not play this earning. If anybody want to play, they can play. But so they can beat, and the stock can go up here 150, maybe 140, something like that. I can see. So yeah, I mean, is the trend is broken on you see this trend is broken upward, so it's going up right now for intraday. Okay, so yeah, it depends on your earning. Our financial looks good to me. If they might beat, they can go up. Yeah. What is your impression about Viru? Man, Viru, I do not know any news or anything. If you have news, guys, let me know. So Viru, remember yesterday we talked about it on Friday, about right here, resistance is right there. That's the Viru. So the trend is upward now, and see how far it goes. If you want to short, you can let this resistance get rejected, or you gotta wait for it. If this resistance gets rejected, then we can go and test the floor, which is around 1289. If this resistance breaks, it can go up. It can go upward. Upward has a. I would not go on a longer side. You got to keep eyes on these, and these.
Year in over year, their earnings trend down consistently.
Yeah, it's a negative EPS. So basically, this is all. The financial foundation is very, very weak. Is any catalyst? I would not know, guys. Viru is whatever the situation. Any pharmaceutical company, guys. Is all about the event. If any event, I would not know. But resistance I draw here, and that's how intraday is the best one to play around here. If this resistance breaks, you can go upward, which is around 1595. But if this resistance, we have a bunch of resistance now. We are heading into the upper territory. If this resistance, this major resistance, guys, you see this rejected. So this area very critical. You can reject and you can bounce. It can go down. So keep eyes on it too. This is resistance, major resistance, critical area. So it can go down if resistance rejected. Okay, that's what I can tell you about it. Though the trend is upward, but trend can change because of the resistance. VALE heading to resistance, which is around $19, but bullish. Everything looks bullish because their financial foundation is strong. Slowly it can go up, but if anybody, I would not enter on the top. If this resistance breaks, it can fill up the gap around here, and I would take the money here because it's a trap. You never know. That's the
June 1st, they had a dam collapse for their tailings for their mining operation.
Oh, really?
Yeah. They're trying to ensure the community that they're not going to have any harm to like the environment and the surrounding community.
Okay, interesting.
but they had, they had victims that they had church teams out, trying to rescue and stuff.
Okay. Alrighty, guys. Anybody has any question? Let me know. If not, then we can straight see you tomorrow morning. Let me know. Okay. Let me see YouTube. Okay. I think YouTube is. I already checked YouTube. Guys, those who are on YouTube, please like, subscribe on YouTube, and please click on ring the bell button on it, so you can always get the notification. Same thing on our Discord. If you are there, please share with your friends, family, and Twitter also. You can share all the tweets and follow. You get all the alerts.
I'm sure everybody realizes that Josh does this for the community for free, but he does have some tip jars. So if you appreciate Josh and you want to show him some love, you can go to his tip jar here on Twitter, on his Twitter feed, or if you're on the Discord server, which is wonderful, by the way, you can also tip Josh through the Discord server as well. All the links for that are on his Twitter, so please go there and show him some love, throw him some bones, and thank you.
Yep. So whatever I do, guys, is only based on my, I keep it free for the community, so everybody can benefit out of it. So, but also I'm, every day I'm live 10 hours. So I'm trying to help the community. But if you like to share something, there's always, all the links are here. So if you go to Twitter profile here, you click on profile and then you see this link right here. So I created a link here where you can have everything: YouTube, Discord, Twitter. And then there is a Venmo, PayPal, Cash App. If anything you want to donate, you don't have to. There is no compulsory here. Okay, this is not compulsory. But if you think you feel something, then to donate, then right here these are the button: PayPal, Cash App, and Venmo. You can donate that. Thank you. Okay. So I think save my throats if unless somebody has a questions, I'll take that. Otherwise, you can call it a day and see you tomorrow morning then. Okay. All right, guys. So I'll wrap it up and actually call it a day and see you guys tomorrow in the morning, 9:30. Thank you for your time today. All right. Thank you, everybody.
Thank you, Josh. That was wonderful. Thanks for getting us prepped for this next week and for Monday. I appreciate all of that.
Sure. Thank you, guys. Bye. Good night, guys.